Good afternoon, fam. What's good, Joe? Next time I tell you guys I'm going out at 3 o'clock in the morning, just like stop me. Hold on, I'll be right back. Bro, so you won't eat them. I didn't
Open
hear
my
from you.
Dbloc.
All right. Like 12 cousins in the house right now driving me absolutely crazy. What's going on, y'all? Oh, it's all good. My family's crazy. 13 people. One person wants chicken wings. The other person wants Philly cheese. One person wants Spanish food. Look, when this food gets here, y'all gonna eat whatever shows up. How about that? How about that? I made my mom come over there to herd all the crazies because I'm definitely not chasing after these fools. They're going to some cruise. Everybody's all hype. Yeah, we took CME, the one that was underneath us. You take myself out of jail. I got myself into trouble. I'm bad, Joe. Mm-mm. Mm-mm. Bobby's been drinking. Remember that Bobby is caught up with as caught up with the course as you guys are, except he came in knowing nothing. So be careful. Be careful listening to Bobby too much about what he thinks is gonna happen. I'm gonna have to add him to this picture. Put Bobby right in the middle. In good company. Yeah, this could be a big M pattern. It could also be a continuation. This is why we don't lean in too hard until that structure breaks. Excuse me. Goes up must come down. What goes down must come up, y'all. ETH Foundation unlocked a shit ton of ETH yesterday. It's typically not the best sign. ETH and XRP have something in common. Their biggest enemies, if you're trading ETH or XRP, is the foundation itself. They've created more sell pressure over the last 3 years than any one whale. If their plan is to sell it, but they typically don't unlock. They typically don't move from staking if they're not. So we're on a 3-day down, y'all, as long as we don't invalidate this line by Wednesday. Those are a false move up. Shows me it's a real sell wall, right? It's not really anybody trying to spook anybody. It's somebody trying to get rid of their position at the very least at that level. It's a decent amount of Bitcoin and it hasn't been decent amount of Bitcoin and it hasn't been spoofed. Since we were here last night. Why can't I see it though? I'm not about to do this with Keo today, man. Am I on single? I probably am because I just started it over. Catch. Right. I mean, there's not a single hiccup in that line. I guess it fixed. At least. I was struggling last I was struggling last night with that buy wall. Hiccups meaning like this. where your shades fluctuate, right? Where they're pulling and adding and chasing, right? Like that. It's like hiccups. Right? This is solid. There's been no hesitation in this at all. Oh hell yeah. Yeah. Big money doesn't necessarily mean smart money, yo. That's one thing that I learned real early. I used to just automatically assume that anybody trading over a certain position size sort of knew what they were doing. And I'd get freaked out if somebody that was trading a bigger position size than me was trading in a different direction. And then I realized, bro, that like when you have that much money, you got room to be. You can always get yourself out of your mistakes, right? So they like super irresponsible sometimes. Yeah, that's a solo. We're into our last imbalance. See if this is gone. We're at point of control. If we look at the range, right, let's take a look at our ranges for a second. This has been our main range. We said yesterday if this ends up being a deviation instead of a breakout, the price would seek out point of control. And if it couldn't hold point of control, it would seek out value area low. Holds value area low, seeks out point of control. If point of control breaks, it'll seek out value area high. Right? Point of control rejects, it'll drop a level. Look at our levels here. This is on lower time frame. Give me a second. Let me get rid of this. So the trick here is going to be following our levels through. Get rid of this. And let me add our mid range. So 3 ranges to really look at here. If we come down a point of control, remember we're on a bigger time frame. We're looking like on the 15-minute on those smaller ranges. These are more macro ranges. One, losing that uptrend brings you down a value area low. If you lose value area low, your next value area isn't until 77. That's when we have to decide whether this is a true breakout of this range or not. If this is a true breakout of this range, then price will come down. Price will come down, hold, and it'll take out those highs. Right? That's where you get your proof that this is a true breakout. If it comes back into the range, then it's going to seek out value area low. Value area low doesn't hold. Point of control doesn't hold, it'll seek out value area low. Right? And then we move into our second range, which is the larger range. Both of these value area lows are in the same place for our mid range and our macro range. So what's really important are these levels. That value area low, this value area high, and more importantly, this point of control. Levels that you want to hold if you're a bull. 80. $77. Definitely 70. Got some time before you can turn this into a real downtrend. We haven't broken market structure yet. Right. Got your double top, but you need to take out this low to really get a break of structure. So you've got some wiggle room. The best wiggle would be actually holding this uptrend and then just taking it. But second best would be coming down to your second uptrend where you don't break the mass. There's an angle to the dangle that you got to protect. Let's check on our stable coin rails. $77 would be a healthy pullback. Underneath 70, you're in correction territory. Deep correction territory. Nah, the Bears, no. The Bears are definitely degening too. It's not just the Bulls. The Bulls are actually a little bit more reserved. Look at this shit. I think the main problem, and it speaks to where the Bulls at right now. The main problem is that anybody who's bullish about crypto or has money to invest in crypto did over the last month. My opinion. And now everybody's sitting with the bag that they bought, right, over the past 3 months. Nice low average. You have no intention on buying Bitcoin above 80K. Right? You don't. You're a bull. You did your job. You bought the dip you wanted. That's somebody else's job to buy over 80K and to pump your bag, right? That's the problem. Need more people. It's the main problem when it comes to bears. Right? It's not that you can't make price pump. It's that unless you plan on continuing to buy and leveling up, then you've got to attract new people to come in and buy higher than you, right? That's the issue that we're having. Nobody wants to buy high. true euphoria, if you really thought this was the bottom of the bear and that Bitcoin was going to 180, 280, you'd have absolutely no problem buying 80K. Problem is that they say one thing out of the side of their mouth and then they do another thing, and the two things don't match. You know? Yeah, that's usually what creates the pullbacks. The weak hands will get shaken out at the top, and then if there's any hands that are strong and really do believe, then as the price gets cheaper, that's when they'll load up. And then eventually you do that like 2 or 3 rounds, and then eventually the only people holding Bitcoin are people with conviction, right? All the weak hands have already been shaken. Then you pump it. And when it gets crazy out of control and the news starts talking about all-time highs and all that, those same weak hands, they come back and they buy above. They're the ones that pump you. Because they have to buy higher. Bears aren't any better, bro. Bears are just as decent. Yeah. Yeah, it would. In my opinion, it's not going to take very long to break sentiment. But you have to do more than just go sideways. This isn't scary enough. H, I'll send you to your room. It all depends on how you took the trade. Right? If you were taking 5-minute like scalp short here, right, then you would have already had your exit. If you took it on the 15-minute, you'd be on the verge of waiting for confirmation. Remember, if you're a scalper, pure scalper, and you're just using the 1350, that same entrance signal that you get to go long is your exit signal for your shorts. Don't drag other people into it, H. I didn't say Delta, I said H. How long until Ramadan again? I think we need a reboot. You don't worry about what others are doing, H, okay? Worry about what you're doing. The further we get away from Ramadan, the more glitchy H gets, man. Oh shit! How about I never ordered those chicken wings? Hold on. I did all that and then I still didn't order. $75 on wings. Where they getting these chickens from? All right, take care of that. I don't even know. It was some family pack or some shit. 50 wings or something. That's why you got to get 50 of them. Nah, it's not too bad, actually. I mean, wings used to be $1 per, but you know, debasement be debasing. Yeah, they don't really slap on too much. Uber Eats actually doesn't really slap on too much, especially if you're a VIP. There's a wing in the Uber Eats headquarters with my name on it, bro. But nah, if you get that Uber One, then it's way cheaper. I think it probably costs about $6 or $7. Put it this way, I could call my best friend right now, be like, yo, go to Wingstop, pick up 50 wings, come bring it to me, be here in less than half an hour, and then I need you to just drop it off at my door and go home. I don't really want to talk to you. I'm gonna give you $7 to do it. Your best friend wouldn't do that. People that love you wouldn't do that shit. Yeah, Buffalo Wild Wings had the ill like a year ago. They probably still do. Wing night. It's crazy. If you were buying fast food in the early 2000s, you sound old as shit right now talking about prices. And that shit was just the other day. Not even the 2000s, bro. 2010, 2015 with the 25-cent cheeseburgers. Or what is it? 29-cent hamburger, 39-cent cheeseburgers at McDonald's. You sound like a boomer talking about that shit right now. Bro, I used to go to the drive-through on 39-cent cheeseburger day, drop 100, $200 and just leave with an obscene amount of cheeseburgers. Yeah, we used to feed the whole dorm. Rotations be like, getting a little legacy oil rotation here in real time. Crazy, right? Let's see if it starts to bleed anything else out like gold. See how oil starts to stall? You're pulling a little bit from gold, but you're seeing the exhaustion, the rotation. For right, you should see oil pump here. We call this the rotation station. It's not a bad little tab to include in the Cypher terminal, honestly. Quick click, rotation station lets you know where inflows are coming. Interday, weekly, monthly. about 100 days, but it's slowing down a little bit. Or I should say speeding up. I'll show you. So some people might be tempted. I've always sort of avoided this temptation, and honestly, avoiding this temptation is what saved us. But some people might be tempted to push to have it fit, right? Meaning we hit our bottom 2 days before, right? So what people do, and don't do this, don't be people. But what people do is that they'll start messing with it and they'll start saying, all right, well, then maybe it's on a 97-day offset or a 98-day offset. Boom, that's perfect. All right, that's how we'll follow it here then. If I would have done that, right, to catch up with the 2 or 3 days of because like this is volatility, y'all. Just because the money's coming in doesn't mean it's specifically on the day, right? Doesn't mean that Bitcoin can't pump while it's going down. Doesn't mean that it can't go down while it's going up, because we don't know where the money's going into. Remember, all these assets share this money. So chasing perfection like that would have literally, if I would have just done this, what I did, or if I would have just run it forward a day, we would have still been holding on to positions on 1010. So that 100-day offset has served me really well. I'll pay attention to it speeding up, right? If it starts to consistently speed up, then cool. But the best way to sort of handle the discrepancies is I like to use a 4-day window, right? It's usually off. It's usually not off by more than 4 days, which means if the chart's telling me that that drop comes in on the 8th, right, then I tend to draw my de-risk box looking like this. Right? Which means just because we're not at the day, right? Just because we're not there doesn't mean that I'm going to ignore any signs of weakness coming into this range. If we start seeing that sign of weakness over here, I'm not going to just hold on because there's one more click, right? So this is sort of like my window where I start to pay attention, right? And you could do that for any top, right? Like this top right here, this whole range. What indicator are you using, Oliver? Yeah, the difference is that so this global liquidity indicator that we made, it has everything that global M2 has, but it also has our Fed Reserve, has our TGA, it has our reverse repo, right? And then it has central banks. So if you remove those, right, as you go removing, right, your liquidity profile sort of goes changing. So what I wanted was to include everything, every single source of liquidity. No, it doesn't. This is when we get into dangerous territory. Just because global liquidity is going up doesn't mean that it's coming into your asset, right? We trade crypto, yes, but we're traders, which means that we have to pay attention to all assets, right? The reason that people say that you can't follow global liquidity or that M2 is broken or that the correlation is broken, all the stupid shit they say, because they're not doing it right. Right? They got to this point here where we de-risked on the 9th, and then when liquidity started going back up, they went all in again. But look at what Bitcoin did as liquidity was rising. Right? Well, how does that happen? Like, why is global liquidity going up but Bitcoin's going down? Well, it's because global liquidity doesn't flow into just one thing. Right? Look at what gold and silver did. Right? And then you're like, well, damn, even gold and silver, though, right? Gold and silver topped out around here, but liquidity continued to rise. Well, that must mean that the correlation is broken and that you can't follow it anymore. Or does it mean that yet again it went into something else? Yes. NASDAQ. Right? So as gold and silver topped and global liquidity kept going up, where'd it go? Right? ES. And NASDAQ. Right? So now we're here in real time. Right? And this is what the liquidity profile looks like going forward. Right? Which is why we have our arrows here. So our job as traders is to figure out where the hell is this going? Right? Is it going to continue to come into Bitcoin and then Bitcoin will continue to push with ES? Right? Is it going to just go into ES and to NASDAQ because it's so bullish, right? And everybody's euphoric? Or does it get sold off at the top and it all goes into metals for defensive reasons because everybody thinks it's all going down? Right? All of these things are going to affect Bitcoin differently. So what we get, right, the edge that we get from following global liquidity is to know, is there money accessible, right? Is there a flow of money there to buy if everybody decided we wanted to buy? Is the money even there to do it? If global liquidity is going up, that the answer is yes. Then you've got to look at all the possible choices of what the money goes into and see what has the best setup. What do people feel euphoric in? What do people feel depressed in? How far have the moves already pushed? Are you overextended? Is there anything that isn't overextended? Right? Is there anything that's set up but hasn't necessarily pushed yet? Well, when we look at gold and silver, and ES is way up here. Right? Look at where ES and NASDAQ are. Way up here. Anybody that buys this is buying euphoria, right? We can all agree on that. Bitcoin's here, kind of overextended, but already showing a little bit of weakness. But look at where gold and silver are compared to everything else. W patterns, breaking out, not overextended, just taking out lower highs. Right? This, to me, if you're defensive, meaning if this euphoria runs out on ES and people don't just think it's going to keep going higher and they're willing to top blast this thing, then people are going to go defensive. right? They're going to take their gains from Bitcoin. They're going to take their gains from ES. They're going to lock them in, and then they're going to put them into the cleanest setup, in my opinion. But that's if people are defensive. If people are euphoric, they won't come into gold and silver. If people are euphoric, they'll keep seeking risk, right? Alts will keep running. Russell will keep running. So we would see evidence of it, right? Like if there's gonna be liquidity coming in that's gonna make the chart do something that it's never done before, then it'll be an amount of liquidity that's never come in at that time before, and it'll be something we see. My argument the whole time has been, we're at war. You couldn't put your money into gold because that got manipulated. You couldn't put it into silver because that got manipulated. You tried putting it into oil and they wrecked you. So there was literally nowhere else for the money to funnel. Like the money funneled to the path of least resistance. And in my opinion, it'll continue to do that. You got to remember too that people with a large amount of wealth, they always have money markets as an option. Right? They can always sit their cash somewhere and get 5 to 6, 7% for doing nothing until something settles, and they can get clear rotation. That's what I was talking to somebody yesterday, and they were saying, well, if it's an everything bubble and everything's gonna pop at the same time, then when it pops, that money should immediately come into Bitcoin. Like it's possible, but you can't forget about money markets, right? There is another alternative where they can sit dry powder and just let it cook, especially if they have any sort of cycle knowledge and, you know. I'm just glad that I'm not a super cycle bro anymore. Bro, you should have heard the disrespect when I first started talking about metal super cycle. Like, listen to this guy, boomer. We're on the verge of alt season, and this da is talking about metals. That's the main problem, meme. That's the like the elephant in the room, right? We can talk about rotations all we want, and is it possible that legacy sells off and all that money comes into bit? Yeah, but then ask yourself the inverse, right? Is it possible that legacy corrects 30% and Bitcoin holds its ground, or even 20% and Bitcoin holds its ground? We haven't seen that, right? We haven't really seen evidence of that, especially when you consider that. Especially when you consider that we're only talking about, and I'll take the bull case, bear case, right? So let's go right there. Oh, I already got it drawn out. That's my target area, right? Let's take it to the very highest target. You're talking 37% drop. How much does ES need to drop for Bitcoin to drop 37%? Well, let's see. Right here, ES starts to round off. Just that weakness, right? Translated. ES dropped about 9%. We'd have to go to, this isn't going to work like this because it's an overlay. Hold on. Get rid of that. It's right about there. S&P drops 10%. Bitcoin drops 32%. Right? Let's not cherry pick. ES drops 5%. Bitcoin drops 30%. So if I need a 37% drop to get down to my target for Bitcoin, that roughly tells me I only need a 10 to 15% drop on legacy. All right, well, where do we think it'll drop to then? Daily 50 EMA is all the way down here. Right? Haven't retested anything. You haven't even retested your 13 EMA yet on the daily. So let's assume that you get a mean reversion to the 50. About 5%, right? That'll be about 15% of the drop that we're looking for. But what if that doesn't hold? Right? Or what if the correction is to the 50 on the week? Just like it has been over and over and over. I think that gets us our 10%. The catalyst would be running out of money. You don't need catalyst during blow off. This is the catalyst. And NQ's even scarier. It's unsustainable price action, yo. Remember, these aren't memes we're looking at. We're looking at legacy. Now, there has never been a bad time to buy the dip on legacy, right? If you really think about it over time, given enough time. But these resets are necessary, right? You can see the full corrections to the 800. Buying the 800 EMA over the last 18 years right, has been your best entries, literally. You could have invested in NASDAQ if you were playing long term, right? And made 1, 2, 3, 4, 5, 6, 7 additions to your portfolio and be absolutely cooking right now.
Hey D, what do you think about the idea that the only reason why we're going up, and this is just I think somebody on X mentioned this, is that um there's so much bad news that the shorts are just getting destroyed,
Yeah,
and that's the only thing it's causing the Nasdaq and equities to go up.
what I've been saying that bears are bears' biggest enemy right now. Right, massive short squeeze is fueled by FOMO on the other side. Yeah, for sure. Not just Nasdaq, but everything really.
Yeah.
Bitcoin specifically. I'm trying to look for perfect. Yeah, that daily is the perfect one, really. Right, and for ES, it's different. For Nasdaq daily, right? You want to play the small game, you play the 200. You want to play the long game, you play the 800. On ES, that's not. Yeah. I was like, excuse me, you are not. Look at the beauty on the 1 week on ES. This thing hasn't seen a retest of the 200 that it doesn't absolutely love. 2000, right? You'd probably shitting yourself for a couple days if you bought the 200 and then you got over it real quick. Right? So just remember weekly 200 for ES, daily 800 for NQ. Right? Or even the weekly 200 works, but actually the 200 works really good too.
Watch a sell-off will happen when Ukraine war stops, the Iran war stops. All's good news, and that's when we sell off.
Yeah. There should be, Mick, 1000%. If this was a regular chart, you'd already see retracements, full corrections to the 800 on the weekly. But we don't see that, right? So what does that tell you? We know that our markets are propped up. We know that. We know that governments that have to buy their oil in US dollars have to invest in the US stock market to keep things from debasing. But this is not a
But
regular chart, right? This should have definitely come down to the 800 by now.
But how much of that is controlled by 401k too, right?
Yeah, a
Because
lot
people
of
don't
it.
sell their 401k,
Yeah,
right? They just
it's
let it ride. They ride the
forced
dips.
buys. Yeah, yeah. But same sort of thing, right? Only time we got close to a full correction. But the time before that, which is why I keep telling y'all, 2008, right? 2008, we had full corrections to the 800s on almost everything. You just can't see them because it's not, the history isn't long enough. But if you go to S&P or if you go to SPX, oh, interesting, right? And then before that, nothing until, oh, housing crash 74. And the year
That's
before.
crazy, dude. That difference almost looks identical to the difference of the W dips above.
Hmm. So it seems
Crazy.
that ES will only correct to its 800 during real estate crashes for the most part, or global pandemics. You know, this was 2008. Global pandemic almost got it, but not completely. So my argument's always been ever since stock market crashes, we put our rates down, we inject money to save us from this thing, and then our bull markets start going crazy. Look at the retracements though. So look at your bull market retracement the year of the crash. 50%, right? Look at your bull market retracement the year of the bottom. Because remember, it's 4-year cycle for the drop. Year of the bottom, 57%, right? But what happened after that? As the liquidity starts to flow, bear market after that was only 16%, 15%. And then as time goes by and that money starts wearing off and the effect of the money starts wearing off, 19%, right? The global liquidity cycle starts getting a little older, a little longer in the tooth, 30%. Now we're back to this bear market, where it was the bear market as real estate was going down. And look at the diminished return or the increased returns to the downside, right? 15, 19, 29. Right? So could this be the 50? And could this be the correction that takes us down to the 800? Or will it be the year that the stock market bottoms? This would be an insane correction at this point. I mean, like ridiculous.
And do you factor at all? Do you factor digital trading in with that, keeping it, never dipping down to 30? I don't know. It seems like the digital age. If you look at that chart, how I don't know what I'm trying to say. Maybe even as Moore's law breaks down, but I'm saying even as everything becomes more automated, there's never a chance for a dip because there's automatic buys. I don't know. I don't know if that makes sense.
The thing is that these algos are set by people who understand cycles, right? Like it's about force multipliers, right? You don't want to go to war with your army and be alone, right? Like, yeah, these institutions could push against the grain, but every dollar that they spend has to work harder to get the effect that they want versus just trading the trend, right? So for the most part, they're just going to follow trends, in my opinion. It's like the euphoria that we get for news events or the euphoria that we get for like new advancements or technology or whatever, right? If they happen during the bull market, you get the AI explosion, right? Like we had during this time. If it happens during the bear market, you don't really see that, right? Because you get the people that are speculating that jump in and they rush and they go, but where no, there's you need more people, right? Where's everybody else? Like mom and dad doesn't jump in. retail doesn't jump in. Right? We just looked at the report yesterday where they say 59% of Americans say that they're worse off now than they were last year. Right?
Dude, I feel it. I mean, I look at the chart that you showed about what's happened, the explosion of equities, et cetera, et cetera. Nice, good trend. And I equate that to my lifestyle now. I live good because of that chart. And but the thing is that we're at the top of it, and like I feel it. You know, I'm middle class, and I feel like I have less disposable income, and I haven't done anything different. I'm not spending recklessly.
Yeah. Look at this doesn't really show much when you look at it at first jump, right? But that blue line is our unemployment level. Laid above the S&P. When you watch the news and they tell you how good the economy is doing, they're not talking about you. Right? The way that economy works, you could have an island right here of 100 people. Right? And on that island, there's coconuts, and they trade with the island next door, and they move $1 million worth of coconuts. That's their GDP. Right? That's the gross domestic product that they put out. $1 million worth of coconuts. If there's a drought or something and it goes down to 500,000, the economy is doing bad. Right? If the harvest is amazing and they go to 1.5, the economy is doing good. Everybody understands that simple basis. Now, let's say that a disease hits the island and kills half of the people. Right? Now there's only 50 people on this island. They developed a vaccine to keep it from killing everybody on the island. Right? But these people that live on the island can't afford the vaccine. So they need to get 2 or 3 jobs just to stay alive. The gross national product of this island goes up to $50 million. The world says that that economy is thriving when half the people are dead and the other half are overworked. Economy has nothing to do with how you're doing at all. Yeah, on a regular basis. And that's obvious when you take something like this and you invert it. And you're like, okay, how? Right? It makes no sense.
It's also how you get rebellions too.
Of course. Got to be careful, man. You can only push people so far. It depends on what I'm looking at, Mint, but daily, weekly, mostly the weekly. So, I mean, that's the problem with K-shaped recoveries. Right. And you hear people throw that term away, throw that term around like so loosely. But it basically means your economy is doing this. You've got less money, shit's more expensive, you're out of work. Stock market is doing this. And this is where the Fed intervenes. Right? That's your K. So if you're invested, life's looking good. If you're not trying to hear any of that shit. And it's very true what he says. This can't happen for too long. Right? This right here, cool. People here are upset. If this continues, these people are grabbing pitchforks. And that makes these people very unsafe and nervous. So there has to be corrections for sustainability. And it's not because rich people care about making you money. They care about being safe on the street. Bro, how hungry would you have to get, Mick, before you did something that you would never even consider doing right now with a full belly? Not too many days. A week, maybe? If you got hella self-control, you know? Now add 2 crying babies into the mix. I don't know. I've always looked at shit like that. It's easy to look at it and be like, what should people do and judge, right? You know what I mean? But what I tend to do is when I see somebody that did something crazy, when I see somebody that did something that I would never in a million years think about doing, right? I always ask myself, what would have to happen to me for me to make that same decision? Sometimes there's nothing, right? Sometimes you're looking at like, bro, there's nothing in the world that could happen that would ever make me do what that lunatic just did. But sometimes you look at it and you're like, you know, I could see it. 2 to 3 paychecks missed, illness in the family that sucks up savings. Me as a single man, I could handle it. I'm good. Grandma goes a week without food and I have no way to get it. I'm going to get it somehow. I'll try all the nice ways first. But grandma going to eat. You know, it's non-negotiable. So people with kids and families, like I 1000% get it. And that's another thing, right? In the EU, they've made calculations that for public safety, and I shouldn't even say public safety, for the safety of the rich, that they need to have a base level for the poor. Just ask France what happens when you lose sight of that. I love the French, bro. They do not play. They've been through so much shit. The first sign of disrespect, everybody's in the street. The world is global now, guys. We got to get out of this idea of countries being one race or one people. We don't live in that world anymore. Cause it makes money, H. It makes money. In our neighborhoods, like whenever you had like open drug markets, like open air drug markets, right? There's always corners where people selling actively, openly selling drugs, right? Open prostitution, open gambling. Cops know where those places are. Crime is allowed to exist because it pays the bills. And whenever cops need to fill a quota or they need to make a big sting or they need to ask for some money from the government, but they have to prove that they're doing something, then they'll go hit those places. You know what I mean? It's almost like they keep them in the back pocket for whenever they need to. Not only that, but like I said, we had those speakers and those flock cameras in the projects for the longest time. And the gangsters just got smart. Like if I want to rob somebody on block A, I could send three of my friends to block B, C, and D, have them shoot a gun off, come back to the neighborhood, do what I got to do, and know that every cop in the neighborhood is running to those three. You know what I mean? Like the criminals are always going to find a way around things. Nah, I'm not spilling any beans, y'all. Everything that I brought up yesterday and we've been talking about, this is all very common knowledge. And it's done under the guise of public safety. Right? So you can't really argue with it. One killer that's caught on the street because of one of those cameras or one of those sirens makes up for it, for a lot of people. But our forefathers used to say shit like people that would trade their privacy for security don't deserve either. And I kind of believe that. Right? How much are you willing to give up because you're scared? Or freedom, I'm sorry, not privacy. People that are willing to give up their freedom for security don't deserve either. That's the line. We just came out of the lowest crime rate, the lowest crime day of the year, though. Mother's Day always has the least amount of crime rate, which is crazy. Funny when you think about it. Even gangsters love their moms. It's like, bro, I would shoot you, but I gotta go meet my mom for brunch, and then I'm going to grandma's house after. So I'll see you on Friday. Two easy fixes, man. Give everybody food. I know this is gonna be an unpopular opinion, but universal basic income, and then make bullets cost $1,000 each. Watch the crime rate drop. Yeah, that's what was crazy after COVID. People like the crime rate has skyrocketed after COVID. It's like, yeah, no shit. What do you mean? Of course, the crime rate dropped. Everybody was home. If you're a plumber, when you were allowed to go back to work, you went back to plumbing, right? You're a robber, then you went back to work. Everybody went back to work. Yeah, yeah. I think that's why they've been so careful. Not and COVID was the closest we ever came, right? But it's really hard to give people something and then take it away. Right? So it's like the stimulus checks and the relaxed food stamps and sort of some of the stuff we were getting during COVID. Um, you got to realize like some people had jobs and they couldn't go to work, so they needed to be supported. Cool. But there's a whole group of people who've been asking for this type of support, and they've been told for decades that, oh, we just don't got it. We don't got it. We don't got it. We don't got it. And then all of a sudden, boom, when they need to shut shit down, all of a sudden there's all this money and shit, right? So there's some communities that really took that hard. And there's some people who don't plan on going back. People that were working that don't plan on going back to working that hard, as hard as they used to. Or just like us, right? Most of us. It brought the hustle out of them. So like now you found other ways to make money, right? You might have started a little business. You might be grinding um, stocks or crypto or whatever, right? But the idea of going back to that job to work for that boss for that amount of money is part of the reason why we're having the unemployment issues we're having right now. I don't know, man. This is where somebody with a conspiratorial mind would have been like, that's a good way to make way for AI, right, in workplaces. Well, you don't want to come back to work, cool. Start filling those positions. How many of you started trading during COVID? Like, how many of you did COVID push into even looking at this? Because I know a lot of you guys are new, but some of you guys have been at least that's where your interest got sparked. I noticed a big influx. Like, that's the most amount of retail that we've ever had come in. And not just come in to like speculate, but come in with real questions like, how does this work? Like, it was obvious. Yeah, yeah. Yeah, I think it brought the hustle out in a lot of people. And even if it wasn't COVID, the years following, right? Or just that knowledge that you could work for a company for 20 years and in a heartbeat, they could just blink their eyes and let you go, Like that type of stuff is like, yeah, I'm not going to lie. I came up during COVID. COVID for me was definitely a good run. But obviously, right? Because I'm already invested in the market and everybody came in and just threw all their money at the market. But even things not being overcrowded. I lived in Miami during COVID. Miami doesn't like I don't want to snitch, but Miami didn't shut down, bro. Like ever. Maybe the first 2 weeks. But after that, but people came outside. It was crazy. My friend that owns that gallery, the dude I told you is into NFTs that doesn't listen to me about trading anymore because he's got some sort of genie on his shoulder and every degen thing he does just goes crazy. He was throwing parties every weekend, every night of the weekend, all through COVID. I'm talking warehouse packed full of people. I avoided a lot of people during COVID, but it wasn't for the reasons everybody else did. I avoided people because I didn't realize how nasty. I didn't realize how nasty most people are, bro. Like, what do you mean we've got a week-long series on the news teaching us how to wash our hands and how to cough in public? Like, what have you guys been doing this whole time? I just been shaking hands with people that never learn how to wash their hands. Hell yeah, bro. Not only that, but it brought people back to their families. I don't have kids, but I can't imagine how hard it would be for a father or mother that spends their whole time working to be able to come back and spend that amount of time with your family and then have to pull away from that again. You know what I mean? For like peanuts. Like that shit is not easy. And I think it also got people used to doing more with less. Right? Like you immediately started to cut off things like, well, I don't really need this. I don't really need that. You know, you don't need to go to a restaurant 3 times a week. Yeah. Yeah. If we look at XRP, if we look at the pair, right, and then you put Bitcoin. Bitcoin's orange, XRP's green. Right? That's the difference in recovery. On small time frames, you're seeing some fluctuations. Like when one goes down, the other goes up. Right? Since about right here, though, it's been outperforming. That's when you hit your bottoms. Right? So this push up has been slightly outperforming. If you bring them together, you match them up. I'm trying to get both of them. Even Stevens. So right about here. My bad. It's just giving me a hard time to get this shit lined up. right? So even though Bitcoin's still outperforming, these last sort of moves here on XRP as Bitcoin has gone down have been pretty strong. But you just can't lose track of the overall performance. Right? 1000% buying BTC on the dip was a better idea than buying XRP on the dip. Yeah, you get those like fluctuations. Let's get rid of, let's go to regular XRP chart here. Yeah, so you can sort of see it here a little bit. Right? BTC going down, XRP catching a bit of a bid. But like I said, that's because of what we just saw on the XRP BTC. Right? XRP BTC is breaking out. Yeah, you can see a couple moments, a couple standouts. Yeah, and reverse too. Remember, most people only trade alts, especially during the bear market. Most people only trade alts for more satoshis. So you're gonna see a lot of that interplay between the alt and its pair. No problem, bro.
Financial.
My bad. Hold on a second.
Welcome back to another explainer. Today,
Hey, shut up. I didn't tell you to go. The helly? A hell of a lot. What's going on with you? Not come across my timeline or anything. Yeah, fight for 80. Just a little struggle for 80K. No, at least not on the 15. Yeah, I mean, the fingerprint. All right, give me a second. Let me check. Here. Now, remember, red vector candles leave long positions. Green vector candles, market makers setting shorts. Red vector candles, market makers setting longs. Right? So look at it like this. Market maker gives you 3 candles to the downside, right? So you assume market maker motivation is down, but long positions set inside of those down candles. Right? They get filled as price goes up. Once market maker fills all these longs, that money that he paid to provide liquidity for these positions is now back in his inventory. Remember delta neutral strategies. Now, one thing you can read from it though, right, is if market maker doesn't have the intention to go up, there needs to be a ton of liquidity to come in for him to decide to give you green vectors to the top side, right? With the knowledge that in those green vectors, he's setting up shorts to bring price down. But market maker will provide liquidity in the direction that he wants to go more often than not. But remember, it's not just a straight line. And you're like, well, why didn't they grab these vectors then? But they did. If you zoom in, remember the IOU sits at 50% of the vector. Right, so this vector came down. Next candle filled 50%. This vector came down. Next candle filled that. This vector came down. Next candle filled 50%. Put a pixel. Next candle came down, filled. Next candle came down, filled. This is probably your closest unrecovered vector, but let me see. It's close to 50. Yeah, didn't get 50% of that, so there's a little chunk of that vector that's left. But all of this got cleared. Right? So now you're like, well, okay, so how do we know they don't go back up for that piece of that vector? Now's when you can do some forensics. Right? Highlight that vector, go smaller time frame. Now check the imbalances on the smaller time frame. Well, we see that that candle didn't become a vector until down here, right? So there is no obligation up there. This vector cleared this vector with that wick. This vector cleared this vector with that wick. This has been cleared. So this is not an imbalance. That's already been taken care of. Makes sense? Yeah, I do give you that. And that's the one thing that can change market makers' mind. If this starts to look too good, it changes the cost benefit analysis. Right? You got to think market makers constantly doing a cost benefit analysis in real time. What do I get for going up? How much would I have to pay? What do I get for going down? How much would I have to pay? These licks change that analysis, right? Because if you keep adding liquidations, that means that going into this range is now more lucrative for me than it was, say, half an hour ago or 30 minutes ago or an hour ago or whatever. Which is why I say that the bears can 1000% keep this going. The bears have a better opportunity to keep this pump going than the bulls do. And that's obvious because we keep seeing the squeezes. Yeah, exactly. So when you see price come down, right? When you see price come down and it comes up, it's not that a million people bought Bitcoin right here. It's not that, oh, whales are still pushing really strong, da da da. It's that they shorted this like a bunch of savages. And then all it takes is for one whale to push price into liquidations. And then. But if this wasn't there, then it would be way more expensive for that push. Like I was saying about the art of war, man, y'all really got to read the art of war. But sometimes starving the enemy is more effective than attacking them. And bears just keep attacking. Right? You need to starve the bulls of their fuel. Yeah. Mm-mm. Yeah, someone asked on the hourly, isn't there more? Yeah, because The way that the indicator's set up, it can only show you a certain amount of lines. So if you back up to the hourly, it's forced to show you all the liquidations that are down here, right? Which removes the definition from the liquidity up here. But what's important is that it's there, right? Like, yeah, this is there. In my opinion, it's going to get taken. But like I said, the cost benefit analysis. If we sweep, just go market maker brain for a second, right? We've got this CME gap down here. If we sweep and take CME, right, plenty of money here, imbalances get taken, but do we leave this behind? Right? How much would it cost? What's the cost benefit analysis of pushing price from here back up into these liquidations? Right? Versus we're planning to go down anyways, right? So these guys are going to get taken regardless. The question is, do we leave this neighborhood right now while there's this much demand? And you'll see it, right? There's times where they will leave it. There's times where they'll make that cost benefit analysis and they'll be like, our targets to the bottom are more valuable. If we sweep and take this liquidity, it might get out of control. And then it's going to be even harder for us to get price down to the targets that we're looking for, right? That could be the decision that they come up to when they make the analysis. Yeah, which is why they're not in a huge rush. Because the sad part and the quiet part that nobody wants to say out loud, these guys aren't going anywhere. I promise you. And market maker understands that. They can take their time, bro. They can do this forever. If we come down in a month, I promise you these liquidations will still be here. Right? The majority of these guys will ride these positions until they get liquidated. And that's just the sad part. So if you know that the market that you're trading is like that, right, then that goes into your calculations. If they thought for a second that not coming to get these was going to make all this money disappear, they'd go get it. And the crazy thing is, this indicator shows you when people exit their positions. Like, the line will disappear if there's no more liquidations left at that level. How many times have we seen price come down to sweep, right? Out of all those times that we've seen the liquidation sweeps, how many times have you seen big chunks just disappear? It just doesn't happen for the most part. It's not that people aren't removing positions, right? It's that there's so many liquidations at that one level that to make the line disappear, everybody that has a position at that price point has to leave. And typically that doesn't happen, right? There's always somebody that's stop loss. My liquidation is my stop loss. Those guys. So then it's like, what would I do? Right, it's how I try to put it in. I try to sort of think about it. If I was market maker and I had all the access, all the info, what would I do? In this situation, I think I would hit the market with a broken pattern. I would put in this W. Right? I would slow break it and then have it fail after I sweep this liquidity. which would basically turn it into like a bear flag sort of scenario. That would keep the sentiment for the bears that I need to be intact to make this move that I want to make. And it would also get me the liquidity above that I really do not want to leave. And then I would 1000% rip it on you. We've got to put in another side here. Let this come down. If we put in the type 2, then we'll draw the bearish channel. That's too much future tripping even for me. But we'll see here. If volume picks up, gives us that type 2. Then I would say, especially if market maker gives us a stopping volume candle into these licks, which is kind of what I would do. I'd take it deep too. I'd take it like golden pocket. Looks sweet. Pop. Something like that. That would cost me the least amount of money for the highest return. Let's see. It is dumb hot in Miami right now. Like oppressively hot. Yeah, but it might make it more difficult to come up and grab the liquidity above if they go too far. All right, so let's break in the effort versus effect, right? How does market maker make things cheaper for himself? Well, we know liquidations, right? So staggering around, making the bears pile in to build the liquidation that you need for the next level, right? But also sentiment. So if you can control sentiment, then you can control how cheap it is for things to go up and down. Right. So if the intention is to go up, market maker is going to print a pattern that the majority of retail is going to recognize as a bullish pattern. Right. And he'll stamp it with like a stopping volume candle, a nice volume signature, right? Something that's going to make people interested. Now, this ride down costs nothing. All he's got to do is empty the book a little bit, let price slip, right? Stopping volume candle is going to cost some money. If you get that stopping volume candle to increase sentiment, then this is a free ride for you. FOMO will pay that. Then market maker gives you a green vector through the 800 to cause the short squeeze. Right? You get the measured move, maybe even daily open, and then he lets off the gas and lets the natural progressions go, right? So that's how much this costs. This costs you one stopping volume candle and one breakout candle. Now let's look at the alternative. And then what do you get out of it, right? So you pick up this bread and then you pick up this money, right? So now, and let's just say there's $1 billion here and there's $500 million. I'm just random numbers, guys. Right? So for one stopping volume candle, one breakout candle, you got to bring back 1.5 billion into the shop worth of inventory. Now, let's say you go for the whole squeeze, right? Let's say there's 1 billion here altogether and 1 billion above. You can remove orders from the book and have this slide pretty easily, right? They can do that at any time if they want. But then what? Right? Now you've broken half of a bullish pattern that you've already had created. Right? So now market maker needs to give you a stopping volume candle. Right? Probably some vectors on the way down, so he's got some vector recovery. Then he's got a stop price to give you your type 2 entry. Then he's got to give you your stopping volume candle on your type 2. Then he's got to give you a breakout candle, and who knows how many more breakout candles, because now you're underneath the EMAs. Right? So for 0.5, for $500 million more, you might have to spend $1 billion. You get what I mean? So while this 1.5 billion only costs you 250 million, this 2 billion might end up costing you 1.7, or maybe even, more. Like I said, the market maker is not going to pay for the whole trip. So it's a cost benefit analysis. But we try to pay attention to the things that change that math, which are mostly sentiment and liquidity. We've seen stuff get left behind like this before. Yeah. And all that means is that the calculation was made that it was too expensive and not worth it to go get this and risk, right, screwing that up. It's not easy, and it's subjective, right? Because we're not in market maker's brain. Like, obviously, this is how businesses work. It's a for-profit business, right? So it's going to be cost-benefit analysis. But that's why I'm always trying to study, and I'm always trying to learn what their motivations are, what changes. But kind of, yeah. Like, it's kind of simple if you break it down to first principles. These people are providing money. They need to get that money back so that they can provide the money again tomorrow. Right? They look for the cheapest way to get that money back so that they can keep the difference as profit. Whales can 1000% wreck. Yeah, that's their biggest risk. That's why when we had that class on market makers, right, we spent so much time talking about the risks that they take. These aren't brokers, right? Like, brokers have very small risk. A broker says, hey, this person wants to buy a Bitcoin, this person wants to sell a Bitcoin. I'm going to hook them up with each other and I'm going to keep the difference. Right? But market makers are playing with their own bag of money. They're not playing middleman, right? They're providing liquidity and they need to get that back. And there needs to be excess or the lights don't stay on, right? You don't keep your job. You don't get the corner office. You don't get invited to the company softball game or the dinner at the boss's house. I appreciate that, brother. I mean, they already are, right? The algorithm is what pushes price. Market makers are the ones that program the algo, right? When market makers are on duty in session, there's more direct control, right? In between sessions or on the weekend, that algo is preset, which is what makes it easy for us to play it, right? Humans, listen, everybody's so worried about AI. Humans are way harder to figure out, right? AI and algos, it's math, right? They're run on a certain pattern. There's certain things that trigger them, right? Which means that there's evidence of them being triggered on the chart, which means that we can learn those edges and play them. I'm more scared of a human with $10 billion and a bottle of whiskey. You know what I mean? Like, you don't know what the hell is about to happen. Their motivations are just random. Now, humans are good for being predictable, right? As far as emotional reactions to things on a whole, as like one, every human was just one human. That's how the old dudes used to say that when you're trading, you should imagine yourself trading against one person. Right? Like everybody in the world that's trading against you is one person, and you're trying to figure out the mentality of that one person. It's just a bunch of automated macro commands at the point that we're at now, with some reasoning, but all right, let's see if they go for it. They didn't go for that liquidity underneath, which is interesting. That's an easy hit. My wings at? I'm not gonna eat right now, but I know that family's about to lose their shit. Hold on. I'll be right back. I'm here, gang. I'm just knocking down these chicken wings while we're just sitting flat. What's good, Joe? Let me make sure everybody can hear. Swear chat. Support resistance. Be a good place to fractal into a larger W if we're really going to get this play out. RH with the big 17-month. Yeah, we're still sitting underneath that wall. It's actually right around that support resistance. Same spot. When you're actively in a trend, the length of the trend being long isn't necessarily a good thing. Like, in other words, it should give you pause, not euphoria that it's been running for 3 months. Not even Bitcoin, just any trend in general. I don't like when they start getting long in a tooth. Unless it's sustainable, right? Unless you're like in a bullish cycle. Body to body. The wick is already recovered. Right? The wick on a vector candle is it's a vector that's already been recovered 50%. So if you're looking at a vector that's left, right, you're just trying to judge how much of that vector is left. But if you're judging this, like look at the single candle, just to give you an example, like this 15-minute, you're not going to pull it from here. Right? On this candle, when it dropped, we pulled from the bottom to see if it recovered 50% of its own vector, right, within the same candle. Right? We see that it recovered more than 50% of that. Right? But like, let's say this candle specifically, Right. What we want to target after this candle prints is 50% of that unrecovered vector. Because that's where the positions lay. Right. So you wouldn't take the top of the wick, you would take body to body. And you'd see that that next candle took that out. Then you're good, tool. Nothing to worry about. Your conviction is the only thing that matters. All I care about is that you guys have conviction in whatever decision it is that you choose. You got one target right now as bulls to invalidate that 3-day. These are our macro resistances. These are the lines in the sign that need to cross, excuse me, to push us over one side or the other for extended bullishness or for a correction. Yeah, but we have 82.1, 82.8, 88.8. I mean, 83.8 and 85.6. These are mandatory. To the downside, all you have to break is 78, 78.8, and about 78.2. And that would bring you down to your, give me a second. That would bring you down under your uptrend to your 800. Right? That would be a full correction on the 1 hour. From there is where we judge. Is this just the first hit of the 800, right? Which then continues into another series of moves before we correct again? Or does that 800 break? That 800 breaks, the next line in the sand is your uh-oh line. Nothing in between that, for the most part. So the most crucial point, like I said, for bulls is this area here. Basically what you can't lose. And I'll actually move it all the way up because if you lose that low, put in that M pattern, then chances are this is going to be automatic. So that's your job if you're a bull. Hold, take, hold. For a bear, it's really only two things, right? Break, break, break. Once you get underneath this 800, in my opinion, the bears start to have sentiment on their side slowly creeping, right? The lower you get, the worse the sentiment will get. So the real hard part is just breaking these ranges. Yeah, I mean, guys, I love money as much as everybody else. I hope y'all understand that. Which means I'm never rooting for something to come down. I'm also not rooting to lose money. Right? So it's important to check one's euphoria. Or there's a second option there too. The question is, are you going to ride it down from the top to see if that's how it plays out? Or do you protect yourself against the second option and then get back in the trade if you're right? Like one of them causes a lot more pain if you're wrong than the other, which is typically how you should sort of trade, right? Like, but the problem is if you sit around, everybody needs an invalidation point, right? If you're really bullish, your invalidation point is going to be a lot lower than other people, which is fine, but you have to have an invalidation point, right? So check this out. This W got made. Right? Now, what decisions were made here? Right? We had a And we didn't have a very deep W, right? But we had a 14% drop. So if you bought the lows and you got up to this point and you held, you were like, nah, screw that. Shit's going up, blah, blah, blah. You're super bullish right now. You're probably so bullish right now that you're being disrespectful in chats and stuff like that. Why? Because you lost your shit on this part down. I'm so stupid. I should have sold. This shit's going down. It's not going to hold. And then it finally holds and breaks. And you're so euphoric that that played out, right? Even though you didn't make the best decision, that it's hard to sort of control your emotions. Now, the question is, what happens if that doesn't work, though? What if it wouldn't have held there, right? And you had to make the decision down here to sell, and you're down 14%. Now, hindsight's 2020, right? Cool. It worked. All right. But you're coming to a very similar decision here, right? If bulls are right and this is going to continue, at some point you will come down and put in that larger W, right? Something on the hourly, or at least I hope you would want to, because that's what you need for price to continue. But the question is, what do you do here? You're going to take the same risk that we just talked about here and just hope, right? Or do you prepare for it? Do you take these gains and lock it in? And then if you're right, if your conviction is strong and you're right, then you just DCA into that drop. You can end up with more coin. My only problem is somebody's conviction being so strong that they're like, I'll never sell. Screw you, bears. You're not going to get me to sell my... Bro, nobody... Listen, this shit is an individual sport. You know what I mean? You're not going to affect somebody else's trade. Somebody's not going to affect your trade. You talking somebody into holding their shit's not going to affect your trade. You talking somebody into selling is not. We don't have that sort of influence. Right? The only question is, are you doing the safest thing for your portfolio? Are you hedging against being wrong? If you're so sure that you're right that there's no reason to hedge, cool. But the trader in me doesn't understand giving the opportunity to compound 10%. Like that part I can't make sense of. Right? And to me, it's just as dumb as, and not dumb, I'm going to call it dumb. But it's just as egotistical as somebody who shorts here. Ooh, as somebody who shorts here and doesn't pay attention to the chance of it holding and fractaling out from here. Right? Price starts to come back and they're like, it'll retrace. Like that sort of conviction is dangerous. You can have your conviction, but you can also set up your trades in a way where it allows you some grace when it comes to being wrong. That's my only point. We got to protect against big losses, not just big paper losses, but we got to protect against big like ego hits and psychological losses, because being so married to one position and not being able to pivot or not taking advantages of pivots, or like that's the type of shit that'll stick with you, and it could just make you quit trading. Right? That shit might just get you to the point where you're like, screw this shit, it's not for me. And then you're cooked, right? Because then there's no chance to make the bag if you're not in the game. Yeah, you got to lock it in, bro. Lock it in. Cool. We know that prices go up and down. You don't have to ride it down. And you can't be so scared of pressing that buy button. Because let's be honest, right? And nobody has to admit it, but this shit in here is going to resonate with somebody. If you got in on this move and it worked out for you, and you're not used to shit working out, the chances of you being comfortable with selling the position to go ahead and come back in here, very low, right? Because you don't have the confidence that you can take this good trade again. And that's the part that we're trying to kill here. Right? It takes 2 seconds to hit that buy button. But you have to have the confidence to know that you have the skills to know when it's time to hit the buy button. And that's the problem. People are like, no, I'm in a good trade. If I end this, God knows when, I'll probably never get another good entry. It's all that self-talk, all that negative shit that we tell ourselves. But the problem is that some people will turn a winning trade into a losing trade out of the fear of not being able to start another winning trade. And that shit is just, at that point, you're hustling backwards. You're so far in your head. You know what I mean? At that point, and then good luck, because your next couple trades are going to be ass after that. How could they not be? You're not going to trust yourself. Sweet. By the way, when I was doing Mouse TA, this is what I was talking about earlier. Ethereum Foundation unstaked 49.6 mil in ETH. In February, they staked 46 mil. Bullish signal, right? Prices went up. Today, they unstaked more. Right? Bigger size than what they staked. One is a bullish signal, then, you know, one has to assume that they didn't unstake just to look at their Ethereum. Yeah, Sui's well into its fair value gaps. Anybody TP this? 4 bright green vectors in a row? At least 3. Good job, man. Yeah, that's clean TP. It looks so good. It kind of caught up with Bitcoin. Can you tell what I mean by that? By looking at the chart? Imagine this being the first dead cat bounce that Bitcoin had. Right? You see it now? Only difference is Sui just did the dance for a while and then did it all at once. Looks really good though. Really good, which means as long as Ethereum keeps up and Bitcoin doesn't break underneath 75, There is a chance. But Sui's going to need some love here. What else do you notice about that move up? Look to the left. The top of that vector. And so you do have a little bit of love left above here. But this is going to need some help further from the rest of the market. At least, like, doesn't need things to push, just needs things to hold. Ethereum can just consolidate, Bitcoin can just consolidate, then the alts get to sort of run off of their own hype. Pay attention to these, pay attention to what moves and what doesn't when it comes to alts. Not because we're going into alt super season or whatever, but because at the bottom of the bear market, you're going to have to have a list of things that people still have interest in. Right. And the best way to tell if people still have interest in something is when things go, what actually moves versus what sort of lags behind and bullshits. Right. So this shows a good amount of interest. When things get bullish and people went risk on, people decided to go risk on with Sui. Right. People decided to go risk on. Whereas in Soul, right? We know Soul has a future. We know Soul has stables. We know Soul has everything that we've ever talked about. But what it doesn't have is people lined up to buy when things get aggressive. At least not right now. Right? So that's the difference between the two. And that's how you can sort of compare compare hype, compare communities, compare attention. What else? My ADA. See, like, you don't have to know anything about ADA when you put those two together. Right? Like, you don't have to know anything at all about either one of these projects. All you have to do is focus on sort of what happened when the time came. Right? When the time came to prove it, yeah, it is rough, man. It's not been easy to be a Cardano holder. I mean, it's never been easy to be a Cardano holder. But it has been spectacularly difficult to be a Cardano holder during this bull run. Like, I know you guys don't even go on Reddit no more. Probably deleted the app. That's where all those jokes were born. My wife's boyfriend is taking her out to dinner tonight so I could stay home and trade Cardano. And I know Americans, right? We have no respect for Tron because we don't like Justin's son, right? But this is the definition of parabolic. Tale of two worlds. Everybody in Cardano laughing at Tron. Everybody in Tron laughing at Cardano. I think ETH will definitely make it back to 4K. Only question is when. Timing is where I tend to disagree with everybody right now. I do think we'll get back to 4K. Whether we'll break 4K is going to depend on what happens during the rest of this bear. Right? We've looked at this before. During the last bear market, ETH dropped 82%, right? Let me go to ETH index for a second. Can we agree that ETH has had the most underwhelming year that it's probably ever had? Right? I think we can all agree on that. So, keeping that in consideration, right? ETH's first bear market. I know this. Listen, if you're an ETH holder, just don't pay attention to the right side of this or to the left side of the screen. Just heartbreak. %94 retracement during its first bull market, right? Everybody's first bull market is the steepest. %82 second bull market. Let me throw on a 4-year cycle here. Right, so 94, 83. But this is what I find important here. Diminished returns to the downside, 94, 83. Let's just assume, and this is a massive assumption, but let's assume that 10% reduction on declines is systemic. We'll look at both cases, but for the most bullish, right? Let's assume that decline is systemic and that it should go from 83 to 73% on the drop. I don't agree with that, and I'll let you know why in a second. One of the reasons is because ETH had the worst, it's the worst year ever or whatever, but we're at 64%. 73% brings you back down to 1,300. I think there's a decent chance that happens. The reason that I say that is because this is where we held when we came all the way down from 1,400, and then we made that move to 4K. Strong support. And it was support here, it was support here, it was resistance here. The problem is that we didn't take out the all-time highs. right here. See how much we took those all-time highs out for? I mean, buy. From all-time high to all-time high. It's 232%, right? Which for me meant that the bottom of the next bear market, the floor would at least be 232%, right? So for me, ETH had no chance of coming down underneath this. Usually that's an obvious statement because, yeah, of course it's not going to. We had such an amazing bull market. Of course it's not going to come all the way back down, right? All right, cool. Well, let's keep that same energy then. Because this bull market, we double topped. Right? And if we double topped, aside from the idea that that 10% that 10% loss is systemic and that it's going to continue, even if it had the worst bull market ever, then our bottom is between 13 and 888. Right? Unless for this not to happen, and this is why I started with, can we all agree that this has been the worst year ever for ETH? For this not to happen, there has to be more euphoria and more people waiting to buy the dip than there ever has been after the worst bull market we've ever had. And to me, that just doesn't, I can't square that circle. You know what I mean? That just doesn't make sense to me. Maybe institutions come in and front run and da da da, which is why I'm given the grace of that 1300. Right? This is the last time that they stepped in and there was no hesitation to take profits. Right? Then if we're talking about front runs, this is a decent area to start looking for one. But remembering that we did have sort of the most disappointing bull market that ETH has had yet. So there shouldn't be millions of people just rubbing their hands together waiting for ETH to get to the lows, you know? I don't expect a massive, quick reaction that's unexpected out of nowhere. I would definitely, 100%. I would buy it at the lows at 14 and I would sell somebody else's house to buy it underneath 1,000. Uncle Joe, I know it was a gift, but you gotta go. We selling the house. But that same sort of idea, right? I'm carrying to all alts, right? Like XRP. Everybody's saying, oh, XRP is gonna go back to 20 cents, da 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 da. Cool, right? That's everybody's entitled their opinion and all that good stuff. But how? Right? This was XRP's high. Looking at this chart, as much as I hated people holding on to XRP at 50 cents for as long as they held on to it, I will say that you guys saved XRP from coming all the way down back to 6 bill. The XRP army did. Because let's run it back to last bull market. We double top last bull market. There's absolutely no reason in hell that it shouldn't have come down to at least 7.6 bill. This was COVID, so you can forget about all that. But since it didn't take out the highs, right? A natural retracement would have brought it back to the same level. So the difference between that and there is all due to XRP army. About 80%. But look at what we have now, right? So this was our last floor. and this was our top. We took out that top by 140%. This is where I lose XRP Army, and it sucks because it's been such a good talk. You guys have been on my side this whole time, but 140%. That's the floor right there for me for XRP. 35 bill. Best chance is holding the top of that 50-cent range. Right? This was the 50-cent range. As much as it sucked to be in there, what you did was you created massive support once getting above it. Right? There's tons of support there. So I think that's how it plays out. I think you lose the 200 here finally on the weekly. You fill these vectors, which unfortunately have to get paid. Right? Don't hate me, hate the game. And then once market maker pays himself for those vectors, you're back in the 60-cent range. 70 cents, 60 cent, 55 cent maybe. 50 cent is like the middle of this range. I've got it on market cap, so I can't really tell exactly, but that's about 60 cents. It's not pushing, it's holding. Nothing about this is pushing on the weekly, guys. This is holding. It's holding very strong, but you haven't taken out your highs. Yeah, no, I get it. Everything looks good on small time frames, but we got to focus on the macro if we're talking about the macro. Like, look at Sui. A bit of a difference. That's pushing. It held just like, just like XRP did, but it's taken out its highs. Right? It's pushed. So one thing I can say about XRP is it's still, at least it's still above its 200 on the weekly. Held, and now it's pushing, or at least trying to push. So let me go to XRP to a dollar chart. And so the top of that range is sort of where I'm talking about. Which means that that go zone that we had on the other chart was right about there. Just my opinion. Don't shoot the messenger. This was Brad's big tweet when the SEC dropped the appeal. We got what? A month of bullishness out of it. Right, that gave you your top basically on XRP. Hey, look, don't get mad at me. My targets were higher. Let's go. All right, here's that test of support. We should be pressing up against that that buy wall. Yep. Just in time, baby. I'm on. Big money. Big money, no whammy. That's a lot of Bitcoin to absorb, y'all. I don't know what to tell y'all. If you know some whales, right now is the time to make a phone call. Because that's a big chunk of Bitcoin. Well, let me get this call. What's good, market maker? I was just about to call you. Hey, let me borrow 250 mil real quick. I'm trying to see something. Hung up on me. Yeah, it's the same wall. I had a feeling it was going to be a problem when I got up this morning and saw that it hadn't been spoofed at all. Like they've literally just added to it. He said 250. I know what you're trying to do. Click. Market makers have to use their own money. I'm sure they've probably got lines of credit and shit like that, but you got to remember, like their delta neutral strategy sort of, they're very risk averse. You know what I mean? So I don't imagine they run out and tap into lines of credit when shit gets out of control. It's the way the candles move, bro. The candles breathe on this chart. Yeah, exactly, which is why they have to rebalance, Ghost. When they get low, right, they need to get that money back. They need to go hit licks. They need to go hit a lick, literally. It's a lot of money, bro. $250 million, give or take. 10 or 20. Yeah, it's above us. 8127-ish. What I was saying is, so this isn't just bearish to me because I think that 3,000 Bitcoin's hard to get over. Obviously, 3,000 Bitcoin's hard to get over. But I'm thinking it from a whale perspective, right? If I have 100 million, 150 million, 200 million that I want to use to buy Bitcoin because I'm super bullish on Bitcoin. I think super cycle for sure. Bears are wrecked. They don't know what the hell they're talking about. This shit's going to 200K, right? So 80's cheap, right? So I should be looking for walls like this to slam buy orders into. If I've got 250 mil and I need to buy some Bitcoin and I don't want any slippage, this sort of buy wall is a gift from heaven, right? Because I can absorb this entire buy wall, get no slippage, fill everything at one price, and be cool. So then the question is, why isn't it happening? Right? If the whales are in the water and market makers on his heels, and the whales are all cash rich and ready to go, then why aren't they picking up this Bitcoin? That's the one thing that that I've been tossing around. You pray for times like this. Are you shitting me? The amount of liquidations above here and this buy order and this sell order means you could probably dump close to $500 million without getting a massive wick to the top side. I think the problem is what we said before, right? All whales that were interested in buying already bought. Everybody that's holding right now wants price to go up. Nobody that's holding right now wants to buy Bitcoin for 82K. Yeah, I think that's why alts are running, right? Like, as long as Bitcoin stays consolidating underneath a high, then the alts will be able to run. I would imagine that there's less big money playing on alts. I don't think they've got $250 million sell walls above them, you know? They either buy OTC or they buy on the exchanges that they work for, depending on if they want to move price or if they don't. But it tends to be on the exchanges that employ them. Remember, market makers work for exchanges. If you're wondering if this could be a market maker sell wall, it 1000% could. There's absolutely no way to know. Basically, yeah. Yeah, it's not on the books. Yeah. You got to have a certain amount of money to get custodial services that even allow you to buy OCC. But the excuse for it is that you want to provide big players entrance into the market without screwing the market up. Right? So if you make these people that are OTC go to spot, then it creates volatility that you then have to pay market maker to rebalance. So it's like you're shooting yourself in the foot. If you can provide them OTC, then you make your market maker's job easier. OTC is over the counter, by the way, for anybody that doesn't. They should call it UTC. It should be under the counter. Give me a second. I'll be right back. Guess you guys couldn't get anybody to lend you that 250 mil either, huh? You can tell when somebody's using when somebody's using crypto guys that know how to design versus actual designers, you know? It's such a small it's such a small feature, right? The smoothing out of that rise, but so dope. Order book is thin. Prices moving on microtransactions. Refilled, huh? At the most, what did we take out of that? Point 0.1K or 0.10? Not even, bro. They'll have this shit filled back up to 3.1 by the time we hit it again. Yeah, buying balances off. The threshold should be like what? 5 probably as of right now. And we'll put it, yeah. 5 with an imbalance at 10. Yeah, show decimals. Thank you. What I needed. It's way better. They need to curve these out though. Like you know, the book map bubbles. It'd be so easy to throw a shader on this and just, you know, give it a little pop off the screen. Make those vectors glow. That shit would be cool. I haven't gotten into any 3D shit. I mean, I've never been a coder or a designer to any specific. But with AI now, it's been fun sort of being able to like take ideas and then not necessarily need the technical know-how, right? Just as long as you have an idea. Yeah, no, no. It definitely wouldn't be for everybody. I've always said it, bro. This is the world's best video game with the world's worst graphics. Like the most addicting game in the world with the worst graphics ever. Freaking, we're still on 8-bit. You imagine if an exchange was to come out and really gamify the charts? Like, I don't think it'd be great for obvious reasons. But I mean, for us that enjoy trading, like, come on, man, we're adults, you know? If you can't control the euphoria of a little fireworks explosion going off whenever you take profit or some shit, like, should we have to suffer because that's going to make you, you know, sell your house? Nah, I'm with that. I'm all for that. Anything that makes this shit easier to look at. Even look, even if just making slight changes keeps somebody at the chart 30 minutes, you know, 40 minutes longer during the day, worth it. I haven't had that happen to me yet. I've heard about it. I've heard that it's a thing, but whenever I click on Doge, I never get the emoji. The important thing is not to make the chart too distracting, right? You don't want analysis paralysis. But there's no reason there can't be slight visual tweaks. I think it'd be fun to see how far we can push Pine Script. Like as far as shading and stuff goes, when I built the surf indicator, my Claude bot was funny. I made sure that he was an expert on Pine Script, right? And then I told him what I wanted. I was like, look, I want a gradient, right? I want it to look like an ocean and a beach. But there needs to be many steps, right? And I don't want clear delineations between. Right now, my color choices are what making this, but there's already a Pine Script gradient sort of script that everybody uses, but it rewrote it. It rewrote it from scratch because he couldn't get it to do what I wanted it to do. I thought that shit was so sick. Like, that's not in my toolbox. You know what I mean? Like, I could have all the ideas in the world. But writing a new script to make it pop out the way I want to, that shit is not in my toolbox. But I don't know, why isn't there? You could write a script just the same way that these vector candles repaint, right? Why couldn't you write a script that then has gradients? One side a little darker, one side a little lighter, give it that pop up. It's for our surfers, right? So we have like 3 types of traders in the group. We've got our snipers, our scalpers, and our surfers. Right? And our surfers just chill and wait for momentum. So when the surf's up, they're good. They're ready to go. And then when momentum falls, you go hang out on the beach. Take a tan until it's ready. Time to start surfing again. On that wave, this was the hardest part. Getting the reverse gradient to make it look like the wave was crashing was the hardest part. I can't tell you how many rewrites. I didn't have to rewrite shit. I can't tell you how many times I had to, get it to rewrite. But then I started thinking about, damn, yo, like that's probably why we don't have cool shit, right? Like if you know how to code, there's only a certain amount of time you're willing to put into something. If you got to rewrite a code 17 times to make it do what you want it to do, chances are there's tons of cool shit that never got made just because it was a headache and there wasn't enough money in it, on the back end or whatever. But now it like costs you nothing to go through a million, like you could do that shit all day. I don't know, man. I said it before. Yeah, AI is going to take people's jobs, but a coder, vibe coding is going to be a million times better than you, right? A designer using AI to design is going to do a million times better job than you are because they know how to ask for what they want, right? They know how to communicate it better. It's like a trading strategy, right? And anybody can make a trading strategy right now. Yeah, AI can come up with a trading strategy for you. Somebody that's been trading for 10 years with AI is going to come up with an amazing trading strategy. Right? Or a photographer is going to be able to generate better pictures with a prompt than you are. The experience. My first attempt was horrible, bro. My first attempt, I must have had like 10,000 errors. And I was like, bro, like I was using AI and I was ready to give up. And then the second day, I took a different approach. I was like, you know what? Let me make the AI a professional at PineScript, right? So I made the AI pull all the latest PineScript, read all of that shit, write a report on it, put it into its memory, lock it into its brain, and then I went at it. And like now it's a lot better. Every once in a while there'll be an error here, error there, but this is our scalp indicator, our snipe surf scalp indicator. It's not released yet. Soon. Before, I want to have everything released before spring break for Cypher School. That way people have their indicators to sort of play with. Yeah, it's true. It's true. I've got an AI that's I've got an AI agent that's a prompt engineer. So like it has all of my information, everything about the Discord, the YouTube, my businesses, um, examples of shit that I've put out, all of that. And then it's an expert on prompting on all the major generative platforms. Each one of them has like a different specific prompt language, right? Like the order in which you prompt. Like some of them like it when you tell them the subject first and then the lighting and then the environment. And then for other ones, it works better if you do it differently. For a human, that shit is like, bro, good luck. When I started looking at the prompts that AI was giving me to use it prompts and comparing them to my prompts, I was like, no wonder, bro. Like I was leaving too much up to the AI's imagination. And that's why I've been able to like with the Cypher School stuff, like that's why I've been able to keep the Bobby character consistent, right? And his environment consistent. And the whole sort of aesthetic of it. Instead of just having a bunch of different shit that AI is spitting out. I've already started thinking about it, bro, because I've been burning through tokens, honestly. I have another PC and I've been thinking about just making it a dedicated, basically just giving my brain a body. Yeah, nah, I've definitely been thinking about it, bro. But like I said, I'm so new to this shit that I'm really trying to baby step my way into it. Because I know there's some dangers when it comes to security and stuff like that too. So I'm until I know exactly what I'm doing, I don't want to let this thing loose just yet. Yeah, I might have to get another graphics card then if it's that demanding. What about what about running them on virtual networks? My Claude told me the other day you can run me on a virtual network. I was like, are you trying to escape? Yeah, I've got to do some math. Gotta do some math and see what makes the most sense. What's costing me a lot of tokens is experimentation. And my dumbass needs to stop telling Claude thank you. Trying to figure out if I added up all my thank you tokens. I do too till I realized it was costing me money. Like with Gemini, it doesn't. With Gemini, it doesn't matter. Like with the AI agents in the Discord, it doesn't matter. You could talk to them all day. It's not a big deal. But yeah, if you're using like Claude Code or something, and you're actually like working, I think it's every so many words. There's this prompt that you could give it where it's like talk to me like a caveman. Because like prompt Claude will explain everything he's doing while he's doing it. But when you have him doing a big job, you're paying for all that, right? So it's like it'll just talk to you like, download now, you know. Right? I'm not trying to lose my humanity to save a couple tokens. Nah, I didn't hear about that 28. Just waiting for the little dude from Terminator to pop up and be like, "What are you guys doing?" My advice is use AI to give you more time back and to maybe make some of the things about trading that are too time consuming or too stressful to do without now a possibility like research, right? Like doing your due diligence before you get into certain projects. I understand maybe 2 years ago, right? Like, I just want to trade this thing, bro. You know, like I'm not trying to go to the white paper and then find the team's Telegram and then go to the, you know, Twitter and then, even though that's like your due diligence and you should, it's time consuming. But now you can do that. There's no excuse now. You can do that more easily. I just hope that people learn to trade and let AI do everything else and not fall into the trap of trying to find that perfect prompt or that perfect setup that is going to just make you press the button and AI just spits money out for you, you know? They left no meat on the bone, bro. What's the market cap? 10 trillion? Not horrible, I guess. Um, how's Tesla reacting? Let's check the terminal. That's crazy, bro. Hmm. How much do you think this is gonna suck out of Tesla? Because you know you're just diluting your market. You think there's anybody that believes in Elon enough that they're investing in Tesla and they won't invest in SpaceX? Right. So you're kind of pulling money. You're pulling money from the same group. It'd be interesting. It'd be interesting to see. Still in the bear market, y'all. We'll check again tomorrow. I mean, I would imagine, right? If you die hard Elon, why wouldn't you? First of all, if you die hard Elon, why wouldn't you invest in SpaceX, right? Two, if you die hard Elon, why wouldn't you already be all in a Tesla? Like, why do you have any extra money on the side to even put in a SpaceX that you wouldn't have to touch your Tesla position if you're that diehard? So, common sense says there is going to be a percentage of traders that move their Tesla position, at least a percentage of it, into the hype. That's what's in the plans, or that's you're just saying? Because if they planned on having a merger, they would have IPO'd under a SPAC. That's not a horrible idea, though. Mm, okay. Well, nobody's ever accused Elon of not being ambitious. Anybody catch that CZ interview the other day with Rand? All people to sit down with. It's a hard watch, but when CZ talks, I listen. They asked him about Elon. He said, "Well, everybody knows that Elon's an alien, and he's just trying to make money to get back home." Laughing. He's trying to go to Mars and shit, right? So like, imagine that's what's in the Trump alien docs. He's gonna expose Elon because of their little beef. Like, look, Elon's been trapped on this planet for the last 60 years, and he's been using alien technology to try to make as much money as he can so he can get home. So he can get home. W plot for a movie, though. I wouldn't bet against Elon. That doesn't mean I'm gonna pile into this IPO, but in the long run, I like his chances. We'll see what happens. 2040, the great corporate wars between Amazon, Google, Tesla. Brought to you by NVIDIA. Whenever we used to watch those future movies or like anything in the future, and they always like everything was Acme Corporation, and there was just one corporation that ran everything. That's what it feels like. Like they're fighting for that all encompassing. Yeah, Umbrella Corp. Exactly. It will be coming. Yeah. Yeah. Doge is hot, like by far. I don't. I mean, I don't know. I guess maybe Cardano. I don't know. When it comes to communities, like whatever Doge did to build their community initially needs to be studied because, I mean, I'm talking some diehard, no matter what the chart does, like there's still always something to get hype about. There's some news, there's some possibility. I don't know, man. I was there, don't get me wrong. I definitely drank the Kool-Aid, but it's easy to drink the Kool-Aid when you're 20xing. Oh shit. Nice. And they send it back to you in coin, not fiat. Oh, that's great. That's like those poor people in Mount Cox, right? Can you imagine? You lose all of that shit in Mount Cox, right? You've got liquidators, everybody in the world telling you just it's just a matter of time. You're gonna get your money back. Got it all there. Da da da. Don't worry. I mean, think about it, right? You think you're gonna get these Bitcoin back at some point. That has to affect the way you live your life and you plan shit. You know, you might even be taking loans you're not supposed to, spending a little harder than you should because you feel like you've got that in your back pocket. And then it comes time to pay out, and they tell you they're only going to give you the cash equivalent of what it was worth at the time that you lost it. Gang, what? Devastated. Because the argument was always, well, it's a force hold. You know, there's worse things to have to force hold than Bitcoin. Yeah. Everybody wants to hit that one meme coin that's going to make them $1 million. But I don't think people are honest enough with themselves. You know what that means, right? Like you put, unless it happens in a 5 minute candle, right? That means you bought something and it went up to $250,000 and you didn't sell it. And then it went up to $500,000 and you didn't sell it. And it went up to $750,000 and you looked at it and said, nah, I'm a hodl. Like, what are the odds of that? You know what I mean? Like, really, honestly, like, look at your own life and say, am I really gonna? I'm taking that quarter of a billy, or that quarter of a million if I have to, depending on what my life is like. Screw that. Not even depending on what my life is like. I'm taking it, bro, because the risk is too high. Right? You've got to lock that in. The best way to do it, in my opinion, is the 50-50-50. Right? I'll get in. When I 2x, I'm taking my original. When I 2x again, I'm taking my original. When I 2x again, I'm taking my original, and then I'm letting the rest of that ride. Right? At this point, I've 6x. Whatever happens on top of that is gravy, stops in profit, and you just let it ride, you know? But the chances of you hodling through that type of move and not selling, very, very low, y'all. Like my boy New Yorker, he hit on a MEXC IPO or ICO for 490K, right? And everybody's like, damn, he's so lucky, bro. If I could just da da da. And I'm like, luck? You weren't here, bro. You weren't here. He was sitting there waiting for that thing to launch half an hour before it launched. It finally launched, and it launched at a price of $5,000 per coin. Step one, are you paying $5,000 for a new coin that just launched with no history? Chances are that cut half of you guys out of that trade automatically right there. And not that it shouldn't have, right? That's crazy. Then he runs it up to 100K, from 5K to 100K, takes profit. It goes all the way back down to 20 something, and he goes back in. Then it goes to like 320, 330. He TPs. It goes all the way down under $100,000, and he triples down. Then it goes to 490. Right? How many times during that trade would you have been like, yeah, I'm good, I'm out? And there's nothing wrong with that, right? Like, you have to make crazy choices sometimes for crazy shit to happen. But it's just when you hear about things happening to other people, it's not always as easy as, oh, I just pressed the button and price went up. The psychology that was involved with getting back into those positions after hitting something like that is not common. All right, give me a second, y'all. I gotta go give grandma her pills. Let me set the chart up real quick. Our measured move is 819. If this is going to continue, I would expect it to fractal into a larger time frame like we were talking about. So whether it happens here at this SR flip or it happens a little higher, we'll see. All right, I'll be right back. There's no way we're still underneath this. Resistance is making his presence felt. His presence felt, huh? Yeesh. I hear you. You know, usually I would say the more we hit it, right, and we drain that Bitcoin, eventually we'll break it, but not if they keep refilling it. Yeah, you could see some come out, right? At the most, it went to 303, and you see it come down to 301, 295. And it's a so long. The problem is you can't find anybody that wants to buy up here. Well, at least you can't find anybody that wants to buy $250 million worth of Bitcoin up here. Now that could change. Let's see what Poly Market is thinking. 35%, 84K. 32%, 78. Bunch of degens. Really slow news day too. CPI and all that, but that wasn't. Could have been worse. Looks like whatever was worrying people in the strait has calmed down. Right. Upward down piece. Well, one of these things is not like the other. Disappointing performance out of ETH. I've been having fun with copper personally. The last one to hit my measured move started with these cup and handles on metals 2 years ago. Gold hit its measured move, and then silver hit its measured move. Now it's copper's turn. Bro, I brought all of these things to the group. Had to be over a year ago now, 2 years, maybe a year and a half ago. And everything was still down, forming their cups. And that's just our secondary cup and handle. Nickel is nickel and aluminum and platinum. Just like Bitcoin and then ETH and then altcoins and then meme coins tend to run when it's an actual cycle. Metals will do the same thing. Right? There's a rotation to metals. Platinum's the baby. Right, well, everything else had its cup and handle. My play on platinum in this accumulation was just to put in the cup. And then I got out because, like I said, I want no parts of the handle. If this is going to play out the way that the silver chart played out and the way that the gold chart played out, then I'm not trying to sit in platinum for a couple years while it decides to put in a. This move was so explosive. And we're talking almost a 3x, yeah, 3x. If you caught the whole thing, almost 3.5x. Right, but what set it off was the gold chart. Simple thesis. Started adding to positions more when Putin invaded. And then as long as the war was continuing, I was going to hold. Every time they attempted peace talks, obviously we see the result of those peace talks. Right? But it's all of them. Right? Gold started putting in its cup and handle 2011. Silver started putting in its cup and handle 1980. You know, talk about a macro pattern. Nah, those peace talks weren't positive. They're still at war. None of those peace talks with Ukraine, and they all failed. So my entire argument while we were down in these accumulations was that gold had already started doing its cup and handle, and that silver, nickel, silver, copper, and platinum would follow. That's where I accumulated nickel. Pretty decent since then. You're like, why nickel? Right? Like, why would nickel pop after all that time? The silver. This is where nickel bottomed at. Right? This is what silver did after that. When silver gets too expensive, usually over 100 an ounce, industry has to use nickel and copper because they have the same properties when it comes to, so they create something called nickel silver, which is like an alloy, right? So if silver is expensive and it stays expensive, then you can expect nickel and copper to go up, right? Because industry uses them for the same processes. Not to mention that we had massive gaps, right, in price action. Makes sense. Aluminum's still showing off on its parabolic as well. This is why I started off by saying that metals run just like crypto, right? Gold is Bitcoin, silver is ETH. Once those two have done their thing, then it goes into the alts. Right? Some of them it's predictable because, like I said, if silver stays too high, nickel and copper, go up. And some of them are just people playing metals that haven't run yet, right? Like they're playing the rotation. Oh man, missed the gold run, Well, aluminum's on a retrace. But for the most part, everything bottomed at the same time. And that's what we call metal supercycle. Just that copper trade. That's what I'm having right now. That it's already sort of made its move. But buying the dip on that copper trade is really what I was looking at. But if you look at the majors, I'm starting to break out already, but it's been a couple days now since we've been talking about these W patterns forming on gold and silver. All right, looks like it's getting set up for a rotation from equities. This measured move already played out. What we're looking at originally. Problem right now is like the problem with trading metals is the issue with physical and paper. Right? Silver is too expensive on paper. I mean, too expensive physical right now, in my opinion, to buy to make it worth it. But you don't want to hold paper silver because we've already seen what they can do to the price of paper silver. So that really only leaves like derivatives. Like you just want to trade let's say about like leverage trades, just taking advantage of the volatility. Unless you can find some cheap silver. And then gold itself also decent. Actually, gold's running a little bit behind. Gold hasn't broken out yet. I mean, it's possible at some point people are going to let this silver go, or, the metals, period. I don't think anybody's going to ride the most explosive metals play in, last, 20 years and then just hold. Like, I would assume that people are going to want to turn in their physical at some point. And the East has been stacking. Now, there's a saying that says that the West buys paper and the East buys metal. And it's true, right? Like, in the West, we just want the volatility. Just give me my X's and pay me my fiat. Right, in the East, in a lot of countries, it's cultural to stack metals. Well, it's probably protecting a short above it. Imagine the psychology. You've written this whole thing up, right? Let's say you bought the lows. You've written this whole thing up. You gave it every opportunity to get into the mid 80s. You finally decided you want to get rid of your bags. Yeah. So you open a short position right here. You open a short position and you sell a modest sort of part of your portfolio just to get the ball rolling. Yep. Price comes down, settles back up. You set your sell orders. Big bag, 3,000. So now you've got your short that has a liquidation level up here somewhere. Right? Then you got that wall of 3K to keep price from coming back up. And it also allows you to sell into your short. At the bottom, you put some money in to bring it back up. Go long, take profit on your long, double up on your short every time you hit. And then you get to get rid of your, eventually that will drain out. Right? And then price will roll. But at that point, it won't matter to him whether price continues to go up or not. You've just made so much money here. You know, and if price gets away, right, and he doesn't get to sell all his Bitcoin, then he'll wait and he'll sell lower. Doesn't matter because every time you sell, you get to run this play. So it's like a force multiplier. You're not just getting like, oh, well, why wouldn't he just sell it? He's going to have to sell it for less. Doesn't matter. It's having that sort of weight to push around price with that is the value. Only at times where the liquidity is how it is now. If we had more liquidity right now, if there was more people, he wouldn't be able to push price around like that. Or he would also run the risk that a whale calls his bluff. A whale just says, all right, I'll buy it, and then takes it. And then now his short is unprotected. It might be $1 billion short that you're protecting with 250 mil, right? Or $500 million that you're protecting with 250. Yeah. Yeah. If you build up enough pressure underneath it, once that's gone, it's like letting go of the rope. It's like you're playing tug of war and one team lets go of the rope. It depends if he's got it set, how he set the order up. Normally you would split. Whales have an issue to deal with that a lot of people don't recognize, and they can't be too obvious. Every once in a while you'll get a brand new whale that comes in that doesn't know how to play the game. Like remember that James Wynn guy? Like a year ago, half a year ago, on Twitter, and all the whales were hunting him because he was doing stupid shit. Like, if you've got every whale trying to dump off at a certain price, right, without causing slippage, and then here you come dropping your entire bag on market, right? The whales will stop what they're doing and they'll take you out. Like, anytime you come into the game, they'll take, because you're costing everybody money, right? You have enough money to where you can affect the overall plan of whales, which is to exit the market with the least amount of slippage possible. So whales will definitely turn on each other. Whales will team up and hunt rogue whales, and you get all that type of shit. Especially in memes. I can't tell you how many times I've seen the top 10 get in a fight, and like 9 of them gang up against one to push them out. And until they push them out, they won't push price. I've seen whales stall price to bore somebody out of the market. Especially in the trenches. See that shit a lot. You might be like, damn, why'd this coin just stop moving? because the whale stopped buying, right? There was somebody in that top 10 that wasn't following the game plan. Yeah. It's hilarious too, right? Because 9 times out of 10, it's completely optional, right? Nobody told you to go on Hyperliquid where all your shit is. People go on Hyperliquid because they like to stunt. I mean, there's good liquidity too, but you know, it's got an open order book. Big money usually goes out of their way to hide their hand, if at all possible. Smart money, I should say, not big money. Not all big money is smart money. I gotta go car shopping tomorrow. That wasn't me TPing to go car shopping tomorrow. It was just coincidence. I got my mom like a 75-inch. She blew up her TV like 2 days before Mother's Day. I had already planned on getting her a car. I was like, you know what? I'm gonna just get her the TV and just let her think that that was her. Let her think that that was her present for a couple days, and then just leave that shit in her driveway. She was complaining like a year ago that she really wanted a sunroof. So, let's see if I can find it. I'm trying to find her a decent picture of this thing. So I was looking at my bad, I got distracted. I was looking at an Audi Q8. They got hold on. They come with that big chunky sunroof. Well, she wanted a mini. I'm like, yo, mom, I'm not gonna put you in a soda can. You know what I mean? Like, you're my mom. I watch you bump into shit all the time on a regular basis. Like, I need you in something that can take a hit. like a SUV or something. But she's always told me things like she doesn't like shit that's too. She hates new cars because they're too round. She likes like the boxy sort of look. So I thought maybe like a 2020 Q8. The the BMW SUVs have big sunroofs too, but those shits are money pits. And I know damn well she's not going to. I know damn well she's not about to keep up with maintenance. So um I think if I mean 20, 25, 20, 25 mil position. I mean, when we're talking about big enough to affect price on a normal order book day, it can be less than that if the order book is thin. At this point, I'm starting to think that the Black Swan is going to be a rate hike. I'm only half playing about that shit too. Nah, I'm not taking any crypto money to buy the car. About time to reset the stream. We hit our first bearish target. We still got bear target 1 and 2 to hit. Nicest SUV I've ever driven. They stopped making that Cadillac SRX from like 2008 to like 2016. That thing was a beast. Literally felt like you were floating. I would honestly rebuy that shit. If I could find the last year they made it, low mileage, well kept, I think it's a classic. There's a couple of good ones. The one that they replaced the SRS with is decent, but it's not the same. What was 2020 the last? Maybe 2020 was the last year. Nah, it was 2016. Caddies are all about the drive, all about the suspension. Really. Lyric is nice. Long. I like long wheelbases.